Welcome to the Capital News. I'm your host, Alex Karitis. Today is Tuesday, March 16th, 2021. Thank you so much for joining me. The title of today's podcast, Stagflation and Social Unrest. This is going to be somewhat of a continuation, a continuation of yesterday's podcast where we discussed global food prices rising to 6-year highs and how that is going to have some major downstream effects, especially in the poorer economies around the globe, and will likely lead to social unrest, to say the least. Protests, riots in the streets, perhaps military coups, perhaps revolution, some combination thereof. We are already witnessing such phenomena. We have been for the past couple of years. A lot of this started in 2019 globally, and obviously it was on break. It took a pause because of 2020 and the pandemic and all of the lockdowns and restrictions that resulted from it. But the issues never went away. And in many of these countries, it has actually gotten worse. So if people were taking to the streets in 2019 when everything seemingly was okay, and as we were told here in the United States that this was the greatest economy ever, which of course was not true, then what do you think these people are going to do now when they weren't in a good place in 2019? They most definitely weren't in a good place throughout 2020. And to kickstart 2021 is not moving in the right direction either. It is unfortunate, but no surprise to us here, that the list of countries that are in dire straits is growing by the day, and the situations in those very countries and others is unfortunately getting worse. And I imagine it will get worse before it gets better. That just tends to be the natural progression of things. Doesn't mean that has to happen. I want to hope and pray that things get better, but I just don't see that happening on the horizon, because all of these policymakers, politicians, one country after the next, continues to embark on the same policies that led them to such economic, political, and societal ruin. So it's hard for me to think that going down the same path that led you to this destruction is somehow now miraculously going to solve it. It just doesn't make any sense to me. So that's why I think things are likely going to get worse before they get better. You know, we used to rattle off a couple of names. Maybe we would say Venezuela and Iran and Turkey, and maybe Syria and Lebanon. Now we got to throw Nigeria into the fold. Now you have South Africa, and I have Myanmar. The lists are growing. And it's just ironic timing, really coincidental timing, that we discussed global food prices yesterday, because there's a couple articles that came out today that focus on this, and they actually talk about a couple countries of interest that we mentioned yesterday, Nigeria and Lebanon. So we're going to read those articles, or at least in part, because it's timely. And I think this is really starting to set the stage for what we have been discussing here for the past couple of years. Now, of course, the media covers it in print, and it might get a top of the hour or bottom of the hour news coverage, at least here in the United States. But I really think these stories need to gain more traction, because the country needs to understand what can happen and unfortunately what's likely going to happen here in the United States. Some of you may have laughed at me over the past couple of years when I said protests and riots are going to come to the United States, because I said, look, it's happening over there. Don't think for 1 second that it can't happen here. You may have blew me off. You said, oh, that's never going to happen in the United States of America. Well, it did. We saw the protests, people taking to the streets last summer. We saw what happened at the Kapital. We saw a whole bunch of things that were taking place in this country. The volume is high. Temperatures are flaring. People are upset, frustrated, depressed, and in many instances, rightfully so. They are frustrated with a system that continues to benefit the upper echelons of society, if you will, that tends to favor major corporations, that picks winners and losers. If you're a major corporation, you're deemed essential. But if you're a small business, even though you may offer the same goods and services of that larger corporation, you have to shut down. even if you were in compliance with doing what the same government told you to do to open up so you could be operational. Well, you got to get shut down again. And we're seeing shutdowns again, more lockdowns and restrictions taking place in Italy. And don't forget about their political quagmire that remains in Italy, where we now have Mario Draghi, who was the former president of the European Central Bank. He is now the prime minister of Italy. Told you, we had a podcast on this a handful of weeks ago. This is a central banker's world. That's all it is. And which is a nice segue to what's going to happen tomorrow at the conclusion of the FOMC meeting here in the U.S. with the Federal Reserve. And Chair Jay Powell is going to come out and announce something to us. Now, they're not likely going to have increased the federal funds rate, nor are they likely to decrease the federal funds rate. Most likely it will remain unchanged. That's not going to be a shocker to anybody. What people are going to be paying attention to is what this guy has to say. And of course, he is the spokesman for the other 11 or 12 idiots sitting around that big table down in Washington, D.C. That's all. He's just the mouthpiece. That's all. He has one vote just like everybody else. Now, whatever the internal politics, maybe he has a little bit more sway. I don't know. But nonetheless, he has one vote. So he's just the mouthpiece for everybody else saying, there's no inflation, growth is going to be fantastic, markets aren't overvalued. If inflation should happen, just by the off chance that our models are wrong, we can contain it. Federal Reserve has all the tools in its handy-dandy toolkit to quash and put down inflation if it should rear its ugly little head. Of course, it's already here. Of course, it is too late and will only get worse, and is evidence in global food prices rising, which is evidence in people taking to the streets, the four corners of the globe, with really no end in sight. A continuation of lockdowns and other restrictions, economic restrictions, are only going to continue to fan the flames of resentment against governments. You have Germany. I don't have the article in front of me, so excuse me for maybe misstating this, but I know that Chancellor Angela Merkel will be stepping down, and of course she has been a major power player on the globe, on the global stage. She will be stepping down, and of course a very big player when it comes to European politics. But nonetheless, she will be stepping down, but her political party has suffered some political hits over the weekend, which was a surprise. So who is gaining traction here? So there is a major political sea change that is taking place globally. These are further unknowns. A lot of this, as far as I'm concerned, has not been properly priced in or discounted into global equity prices or bond prices for that matter. There is a lot of dry tinder out there that is just waiting to go up in flames. And again, all of these people are doing the same thing that they have been doing, which caused the problem in the first place. So I just don't know how this could end in a good situation. All right, so we're going to get to a couple of those articles with respect to Nigeria and Lebanon. There was some economic data that was released today. Industrial output declined by 3.1% month over month. The estimate was for a gain of 0.2%, so quite the swing. Again, a decrease to industrial output, a minus 3.1%. This, I do believe, was the first contraction in industrial output since last April. So that is obviously in the wrong direction. So perhaps this will turn up. Let's hope that it does. But, and it very well may. I mean, when we just authorized another $1.9 trillion, again, you can have a good time for a little while. So we'll see if it makes its way through. But, of course, a lot of these industrial manufacturers are dealing and coping with major supply chain disruptions, which, of course, is only going to contribute to upward pressure with respect to prices. Then we have retail sales figures coming out also this morning. Month-over-month change was down negative, so a negative number of 3%. However, that was for February. However, for the month of January, we got revised numbers, giving it an increase of 7.6%. So a huge increase there from the month-over-month increase from December to January. And a lot of this was most likely on the back of the Nobody Cares Act 2.0, where we passed $900 billion in the month of December last year. So, of course, that shouldn't be any surprise that the money found its way into the economy. And, of course, we unfortunately know that a lot of this was spent on foreign goods because our trade deficits were in record territory. A deficit, so we're talking negative numbers here, $804 billion, only surpassed by, I think it was a figure in 2006 prior to the GFC of $805 billion. So for all intents and purposes, it's the same. This is the worst deficit we have ever had in the country. So it would be one thing to say, okay, well, we have all of this spending, but it's generating a lot of domestic productivity. It's not. It's not. So at least we could say, all right, we're going to expand our fiscal deficits, but it's going to be for the betterment of reducing our trade deficits. Well, that's not happening. Quite the opposite. So our twin deficits of our fiscal deficit and our trade deficit is getting worse. It's getting worse. And of course, economically speaking, from a macro perspective, this should be putting a lot of downward pressure on the dollar. But because so many other countries are in the same boat with us, and we continue to have this race to the bottom with respect to global currencies, well, we can still look like the best looking girl at the dance, the cleanest shirt in the laundry, whatever analogy you want to use. And of course, we very well may be in the midst of a dollar doom loop scenario that may unfold. And of course, a lot of this may be somewhat determined by what Jay Powell has to say tomorrow and what other central banks have to say as a follow-up to that over the coming days and weeks ahead. Because these markets are completely driven by liquidity. The rest of it is just all narrative, it's all talk, it's all BS. I mean, even with respect to the retail sales number, it's getting blamed on the weather. That's why retail sales month over month were negative 3% because of the weather. That's a bunch of malarkey. Okay, you happy there, President Joe Biden, or you taking a nap? Okay, it's a bunch of hogwash, a bunch of nonsense, blaming these things on the weather. It's whatever suits them. Maybe all the stimulus money ran its course and that's it. Okay, because I am sure somebody could find something within the data where we may have seen an increase in retail sales, and maybe they attributed that to the weather too, that there was an increase because of the weather, maybe some sort of foreseeable weather event like a hurricane, something we can see coming, and that induced people to go out and spend more, buy more. Or maybe the weather's really nice. Whatever the excuse is, the point being, this is all about the narrative that they want to push. It can never be a real story. It can never be that, the economy might be slipping. You can't have that. Got to blame it on something else. But the real story that we have to pay attention to is the story of liquidity. Are central bankers going to continue to flood the markets with liquidity? And if they do, and they're likely going to, will the markets continue to buy it? Because that is the only thing that has been juicing global equities and bond market prices higher. That's it. Everything else is just story time for the children. That's it. Greatest economy here, blah, 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 blah. Trade deals here, blah, 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 blah. Weather, blah, 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 blah. Congress, some other federal government somewhere passing more fiscal stimulus, blah, 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 blah. How much liquidity is being thrown into the system is all that matters, and will markets continue to buy it? If they do, then it's reasonable to assume that markets will continue to climb higher. If they don't, well, then it's the opposite, and I think it's going to get pretty nasty because I don't think there's going to be really an in-between. I don't think it's going to be a period of consolidation. I don't think it's just going to be a choppy session. If markets continue to buy it, then up we go. If they don't, it's see you later. Of course, it could be that consolidation. I'm just not putting a lot of probability with that scenario, because that's the only thing that has kept these markets moving since the great financial crisis with quantitative easing. We showed you that on the Capital Economics. You can check that out at thecapitalnews.com or our YouTube channel, Monetary Measures. I hope you have taken the time to watch those videos. They're less than 20 minutes. I think the second part of it is less than 10 minutes. Try to keep them brief, but just want you to understand what it is I'm looking at and what I'm talking about. It's all it is. This is all smoke and mirrors. That's why it's all about the narrative. How much trust can we put into these people? I have no trust in these people. But for some twisted, perverted reason, people will continue to buy into what central bankers have to say. And they do it because as long as their account balance keeps going up, they really don't care. Which, of course, is greatly problematic as far as I'm concerned, just from a human standpoint, because I think we're going to end up being punished for that, and time will tell. But there's clearly a lot going on, but just blame it on the weather, because that's what our fearless leaders do. If something goes bad, just blame it on the weather. That's all. Let's see, what else did I want to mention before we get to those articles? This is something that might put Tesla on the back foot. I don't know, maybe not, but something worth mentioning. And the only reason I really bring this up is because I view Tesla as one of the poster children of this virtual everything bubble. But you have Volkswagen coming out, basically attacking Tesla head on, announcing that they want to sell about 1 million electrified vehicles this year. Okay, so VW, for context, delivered about 11 million vehicles in 2019, the year prior to the pandemic. In 2020, Volkswagen sold about 230,000 all-electric vehicles and more than 400,000 electrified vehicles, including hybrids and plug-in hybrid options. And then just as a reminder, Tesla sold about 500,000 electric vehicles in 2020, and of course it was slightly below that. And, of course, I'm not going to hold it really to anybody as far as hitting goals and coming up a little bit short here or there. But the reason I bring this up for the context of what Tesla ended up selling is because of the extreme valuation that is placed on Tesla stock. And, of course, its corresponding market cap, which is why I call it the poster child of this everything bubble. So the basic belief, just looking at the math of how the market has priced and quote-unquote valued Tesla, you would think that Tesla would have 70, 80+%, whatever the math comes out to. I mean, it's a significant portion of the electric vehicle market. It doesn't. And you are going to have large companies who have been in the auto industry for years competing. Again, this is just one of the reasons why I think that Tesla is the poster child of this everything bubble, or one of them. Because it's just a story. That's all it is. It's all it is. And again, in this case, just like people have to believe in Jay Powell, the Fed chairman, people have to believe in Elon Musk, who I think is pushing the envelope, who I think is going to do some great things, but I also think there's a little bit of a con artist aspect to him too. But people keep buying it, just like they keep buying the Fed's BS, and round we go until economic reality takes hold. And it will. I'm not concerned about that in the least. Some market performance, and then we'll get to those articles. We have the dollar index at 91.92, 91.92 on the dollar index. Relatively tame in the overnight session. Bitcoin is at $55,300 a coin. Not too much movement in the major currency pairs at the time of the podcast. Overnight futures trading, we have the Dow Jones and S&P 500 both flat. The NASDAQ 100 is in the red, about 0.2%. Japanese cash trade giving back a little over 0.1%. And U.S. markets were pretty much down across the board today. The biggest hit was in the Russell 2000, the small cap index. Pretty much a sea of green across the pond in Europe. And the Australian cash trade is down about 0.5%, as are Chinese stocks. On the commodity front, WTI is trading at $65 a barrel, Brent at $68.50, natural gas $2.55, gold and silver, not so great a day, kind of holding their own though. Gold $1,735 an ounce, silver $25.86, and copper is still hanging on to that four handle at $4.08 a pound. And to round it out, Uncle Sam's 10-year junk note is yielding 1.62%, so little changed from yesterday. And of course, this is where all eyes are going to be tomorrow, What will the Fed do? Are they going to try to talk investors off the edge? Don't worry about 1.62% on the 10-year note. Don't worry about it. We're going to get it back down. We're going to continue. We're going to go out there. We're going to buy them. We're going to bid the price up. We're going to put downward pressure on the yields. Don't worry about a thing, even though they just told us that this was a sign of growth. This was a sign of growth. So what do they want? They want growth? They don't want growth? I mean, can they make heads or tails of this? The ECB was concerned. The RBA was concerned. Throwing billions into the system down there in the land down under in Australia. They apparently don't think this is growth. They think it's something worse. That's why all eyes and ears will be paying attention to Jay Powell. And the other reason is because we live in a centrally planned global economy. All there is to say about that. It is not anywhere near free market capitalism. So now on to these articles, which was, like I said, is a continuation of yesterday's podcast with global food prices rising. So the first one, we'll talk about Nigeria. So we have Nigeria, inflation hits 4-year peak as food prices soar. Nigerian inflation had a 4-year peak in February as food prices jumped more than 20%, heaping financial pressure on households already faced with a shrinking labor market and a stagnant economy at a time of mounting insecurity. Henceforth, our title of today's podcast, Stagflation and Social Unrest. Inflation in double digits since 2016. Reached 17.33%, driven by the impact of a coronavirus epidemic that has also induced a drop in the price of oil, Nigeria's main export, and weakened their currency. Tuesday's inflation reading was the highest since the 17.78% touched in February of 2017. The economy was in a slump then and is teetering on the brink of recession now, having expanded just 0.11% in the fourth quarter of 2020. Food prices, which make up the bulk of the inflation basket, rose 21.79% in February, a jump of 1.22 percentage points in January. In a country plagued by insecurity, following a wave of kidnappings of school children in its increasingly lawless north, there are concerns that the stagflation combination of rising unemployment and prices and low growth could trigger significant social unrest. That's putting it mildly, in my opinion. Straining households will be compounded by increasing reports of insecurity in some regions, fueling the risk of broader social discontent. Staples, including breads, cereals, potatoes, fruits, and olives, drove the increase in food prices. Inflation pressures would probably remain high in coming months. And adding this, so this is basically adding insult to injury, unfortunately, for Nigerians. Just 30.6 million Nigerians in a population of around 210 million were considered fully employed. I'm going to repeat that. This is 30.6 million Nigerians considered fully employed, not unemployed, employed, out of a total population of around 210 million. If 30.6 million Nigerians were unemployed, that would be a terrible statistic in and of itself. But only 30.6 million are considered fully employed. Do you understand why I continue to stress certain countries and what is likely to unfold? Bismarck Rwane, managing director at Lagos-based finance derivatives, said the stagflation crisis would take a long time to resolve, with inflation eating up economic gains to the point where any government stimulus might be too weak to generate jobs. Even they mention it. People know it's stagflation, and he's calling this a stagflation crisis. They know. They just don't want to admit it here. Not going to happen until it's too late. Monetary policy dilemma. The president of Nigeria has made investments in rail and road a focus of his administration's drive to kickstart growth, but falls in public revenue linked to the lower oil price have checked his ambitions. Given the low growth and high inflation backdrop, few analysts expect the central bank to either raise or lower its base rate of 11.5% next Tuesday when it holds a policy meeting. Meanwhile, the International Monetary Fund, which said in February that the bank might need to tighten policy if inflation got out of control. What is this? Is this not out of control? Has urged it to phase out financing of the government deficit to help check price pressures and to allow their currency to float more freely. This is what we're dealing with, ladies and gentlemen. This is only going to get worse because they are embarking on the same policies that led to it. And we have the jokers at the International Monetary Fund telling countries what to do. Well, if inflation gets out of control, well, apparently 17, 18, 19% inflation isn't out of control yet. So when the Fed says we're going to let inflation run hot if it happens, what do they mean by that? Because people think that inflation running hot means 3 or 4%. Okay? Just a little context. Just pay attention to what's going on here. Now we have Lebanon. Lebanon to reduce subsidies as cash runs out. Government plans tax on banks, wealth to boost revenues. These are just the sub-headlines on this Bloomberg article. And currency collapse. Inflation spark anger in the streets. Lebanon is scaling back food subsidies and will gradually raise gasoline prices to save dwindling foreign reserves. Foreign reserves are simply what the country will hold: U.S. dollars, euros, other more solid currencies, if you will. The central bank has $16 billion left in foreign reserves, of which only $1 billion to $1.5 billion can be used to fund subsidies, enough for 2 to 3 months, according to Ghazi Wazni, who is the interim finance director, finance minister, who's basically a caretaker because there is no government really in Lebanon. Reserves have halved from about $30 billion a year ago. Lebanon can no longer continue with the pace of subsidies without giving a time frame for the changes, according to the finance minister. It costs $500 million a month, $6 billion a year. That's why the government made the decision to rationalize subsidies and reduce them on some items. Wozni's comments come amid furious protests sparked by a sudden plunge in the Lebanese currency. The pound plummeted below 13,000 per dollar on the black market on Monday, shedding more than 20% in 2 weeks. I repeat, shedding more than 20% in 2 weeks. Since anti-government protests erupted in October of 2019, the currency has lost nearly 90% of its value, pushing millions into poverty. The inflation rate was 84% last year, with food inflation hitting an annual 402% in December. Again, with food inflation hitting an annual 402% in December. I wonder where the IMF is on this one. Is that still running hot or no? The central bank has stabilized wheat, medicine, and fuel prices by providing importers with hard currency at the largely defunct official rate of $1,507 per dollar. It also given a preferential exchange rate to importers of 300 basic food and household products, allowing them to buy dollars at 3,900 pounds each. Other goods are financed in a growing black market at greater costs. The government will remove certain products, including cashew nuts and some branded coffees, from the subsidized list, partly because they were smuggled abroad for profit, according to the finance minister. It also plans to gradually increase prices at fuel stations in the coming months, reducing gasoline subsidies to 85% from 90%. Now, this may very well be something that is needed from a fiscal standpoint, but remember, when we talked about this in 2019, these are the types of increases or removal of subsidies that allowed prices to go up, that caused a lot of these people in these countries around the globe to take to the streets. This was the proverbial straw that broke the camel's back. There was a whole host of underlying conditions that was already setting up the perfect backdrop for people to take to the streets. But these little things, removing subsidies, a little tax increase here or there, and that is it. People cannot tolerate it. He continues, the finance minister, the decision has been taken to reduce subsidies on the food basket. The decision that needs to be taken in the coming weeks is the gasoline. Last month, during the lockdown, we had the same consumption, so we think something is wrong. Wozni acknowledged the measures would fuel inflation, forecast at 77% this year, before accounting for reduced subsidies. To help poorer people cope, Lebanon will introduce cash transfer via prepaid cards under a program approved by Parliament on Friday. The government will pay needy families up to £1 million monthly and also secured a $246 million World Bank loan to support 786,000 of the poorest people. £1 million monthly. This is going the way of Zimbabwe and Venezuela. You see how quickly these things can spiral out of control? A year, a couple years, and boom, we see these types of outrageous rates of inflation. Wozni said the government still planned to devalue the currency as part of a transition to a flexible exchange rate, but wouldn't take that step without an economic reform program and support from the International Monetary Fund. Oh, there they are. There's the IMF. I knew they'd pop up somewhere to help restore confidence and anchor the pound. And with everything that's going on, without a real government at the helm, a lot of negotiations can't even take place. So things are likely, again, unfortunately, going to get worse before they get better. So that's it. Stagflation and social unrest. That was just some good timing for us, where we had yesterday's podcast on global food prices rising, and then a nice follow-up by a couple news outlets highlighting what's taking place in Nigeria, what's taking place in Lebanon, and you can rest assured, unfortunately, that this is a similar situation taking place among many countries around the globe. And of course, it's those weakest links that go first, but we are continuously adding to that list. So we are continuing to pick up momentum, and developed economies are not immune from this. Believe me when I tell you. It will be felt elsewhere. It will be felt here in the United States, and it's not going to take long before it's here. In many ways, it already is. So there you have it, stagflation and social unrest. If you hear anything else, any other articles that you come across, send them to me. I'll be happy to share them with the audience. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Koritis. Godspeed.